Hi, everyone. Roger Knecht, President of Universal Accounting Center. We're here with Erin from Profit First. We're going to be discussing people, payroll, and profitability. And this is going to be an excellent discussion because every company obviously has people and payroll, and let's make it profitable. So, Erin, let's go ahead and get started with this.
Thanks, Roger. Yeah, and it's no joke. One of our greatest assets typically is our people. It's also typically one of our greatest investments. So it can be a little scary when we're evaluating our business from the profit first perspective. And it can be pretty emotional when we're trying to determine what we can afford, what we can't afford. So our goal is that when we have people in place, we have a true comfort and comprehension as to what we're investing in, what our expectations are for that relationship, and how we can really capitalize on our people. Because let's face it, you as the business owner are the most important person. The more time you are able to spend on your business as opposed to in your business because you have the right people and processes in place, the more profitable you will be, right? So our goal today is just to explore a couple ways that we can capitalize on that investment, as well as, some things to be mindful of if you're in a growth phase, and some quick tips and rules of thumbs just to keep forefront of mind should you actually be looking to expand or hire in the future. So we can talk about a couple things, but it's kind of one of those things. Do you want to start with the good news or the bad news? So I'm going to share with you the bad news first. If you are in a place where you are going through the couple of evaluations, the expense analysis that we had shared previously, payroll might be one of those cringe-worthy subjects. They might be what we refer to as a necessary evil, where your income isn't necessarily significant enough to afford the people and the workforce you have in place. And that's a horrifying place to be in, right? So how do we make decisions in that situation? So there's a couple questions I want to ask. If you are in a place where you're looking to wring that towel, the payroll towel, here are some things to keep in mind. First and foremost, look at your roles. Look at the employees that you have in place. Is there anything in particular that the company can do without? You can absolutely go through that expense analysis process with your people. P for profit, re for, replace, U for unnecessary. Take a look at the services you offer. Take a look at the people in place around those services and the systems in place. Efficiency is really impactful in this piece. Is there anything that you can do without? Of course, the next question is there anything that is necessary to be done in-house? That can be that super profitable piece, where you cannot navigate or negotiate around that. Is it something that you as the business owner can take on in this period of transition? Or is it something that you can delegate to one of your employees in this period of transition? So thinking about it from that perspective, identifying what is absolutely imperative, and then identifying what isn't necessarily imperative for you and your workforce. You might have somebody on your team that is full-time right now. You don't have the funds in place, or you have not seen the return on the investment in that employee, and it's just too much for you to cover. Is there a way that you can create greater margins by outsourcing a service that you do? I've had profit first professionals. I've had other business owners come in and actually do an evaluation of their business based on service, running that instant assessment on each individual sector of the business, and then identifying what the cash cow is versus the cash suck. What would happen in your business if you eliminated that cash suck, took the resources that you were using in that for the cash suck and delegated them now to what is actually making you profitable and producing that cash flow, right? Little things like that can make a big difference. What if you sold that? What if you no longer serve that, or you outsource that, where it's still an offering, but you're not using your financial resources to facilitate it, right? Thinking about it from that perspective, sometimes that's a great way to bridge the gap. But of course, in this, emotions run high. People are people, and most often in these circumstances, you don't just have a team in place. You understand that their livelihood is at stake in the circumstance. So just because you go into this analysis or you're running the assessment and payroll's super high, it might be our first instinct to say, okay, oh my gosh, my rent is the highest. I'm just gonna work out of the shed. That's fine. You might say, oh, my payroll is the highest. I can't afford this anymore. I'll gone with everybody, But I do want to encourage you, just because it's high doesn't give you the necessity to eliminate it. It doesn't make it a necessity to eliminate it. So do me a favor. If you are in a place where you're thinking, I'm just going to cut all my employees, or I'm going to eliminate hours, or I'm going to close the doors from this time to this time because, I'm just scared, take a breather, sleep on it. Think about it in a little bit more perspective, or with a little bit more perspective, talk to somebody about it. Avoid emotional decisions. Those can be the ones that get us in trouble.
Your last comment there, I think, is probably the best one. And it's basically not only just to sleep on it, but speak with someone. And what I mean by that is when you verbally communicate it to another person and talk through what you're thinking, it's amazing how more clear your thoughts will actually become, because we're now hearing it out loud. It sounds one way in our mind. It starts to make sense and we start to rationalize things. But when you start to try and communicate it to someone else and then explain or justify it, sometimes you'll see the irrational nature of your decisions, and it'll start to give you pause and maybe identify other options that you may have. So this payroll solution, there's a few things that I think we also want to consider. Is there a short-term or a long-term option here? Sometimes there's that knee-jerk reaction because of cash flow, perhaps, to say, well, I've got to cut expenses. Payroll is the most obvious place to begin. I'm going to deal with this. Well, you've got loyal, trained employees, perhaps, that aren't going to be easy to replace. And if you destroy that loyalty, how are you going to regain that? And so what are the other options that you have when you look at the long term to actually address the short-term situation that you may be stressing over? So there are a few characteristics here that we want to just consciously be aware of. And then as you're dealing with the profitability of profit, payroll plays into it, but it's one of those things that if you knee-jerk, it's going to be a hard thing to replace. So I like how you're talking through this. This is nice.
Yeah, absolutely. And it is important for you to understand that every decision that you make, there's always going to be a risk factor and a reward factor. Spending the time evaluating it, brainstorming is really important, but sleeping on things, it's a game changer. So these are just some questions to ask yourself if when you looked at that payroll line item, it caused you angst. Even if it didn't, these are still really important questions to ask, because again, it might not be necessarily that your payroll's too high. It may be that your payroll is too high in a service that is bringing in too little. So I do want to encourage you to look at this from a different perspective. Just because you're investing in people doesn't mean that you aren't getting a return on investment. It might just be that their attention is in the wrong places. And we'll get to that in a little bit later. But think about that from your business perspective. Don't just jump right into, this is the only solve that I have. So one of the things that I found just in working with other entrepreneurs and business owners is, we tend to think of our people as cost in a lot of circumstance, especially when you're looking at it from a P&L standpoint, but they are also, they are so game changing when it comes to our most finite resource, which is time. And so it's this crazy middle ground in creating balance. But when I typically ask the question, hey, does your employee know how you are judging them or their success? Do you know what your employees do? Do you sit down with your employees and have conversations? Usually it's, oh yeah, we talk at lunch, or usually it's, oh yeah, my employee knows that they're supposed to have X amount of billable hours. Okay, that makes sense. It's good for them to have that understanding, but what are those billable hours do? Do they know what that long-term success looks like? So one of the exercises that I found to be really impactful, not just, for investments, right? But also for your people is sitting down and just identifying what it is that your employees do. Looking at it in the grand scheme of things. It's not just when you hire, hey, list out their job description. It's what is their role? What exactly do I expect from them when they come to work? Whether they're on a W-2, whether they are a subcontractor, what is that job description? And how would I define their success? Having an understanding of exactly what it is that you're expecting from your clients, or if not from your clients, from your team, not only changes how you think about the job that they're doing or the work that they're doing, not so much even the effort or the time or anything involved, but there's power in communicating this to your team. There is nothing more freeing for your employee than to know exactly what the expectation is for them and how they are going to be evaluated, right? If you don't know what the definition of a success is for you in your business, you're kind of just lollygagging through the day, right? Or if they think that they need X amount of billable hours, but there's no purpose or why behind that, it's difficult for them to get the gusto behind that billable hour and produce passion and excitement around their job, right? So spending time and communicating with them is a really powerful tool. But most importantly, looking at our people like any other investment. Okay. There are a couple of things you want to be mindful of when you're working with people. Attitude is one of those things. So if you're going through and you're looking at their job description and they're kind of moderate on all of the specifications that you have for each employee, but they are really passionate, they're good at listening, they're excited, they want to learn, right? That's a great quality trait. Most of the other things can be taught or you can even spend the extra time, conditioning them to see things in a different way, right? But if they're not in that place where they're excitable or they're producing or yielding the culture that you want at your business, I think another question that we often neglect, or another piece of the puzzle that we often neglect is, what does that line in the sand look like? How long am I willing to drag along a mediocre employee? Even if you did spend the time and attention to train them, if they are not listening or they are not excitable or they just aren't getting it, sometimes that happens. Setting parameters in place and giving yourself an identification as to the expectation is really, really helpful when push comes to shove.
So there's one thing I'm going to add to this, and I think this has been very helpful when working with our clients, is one of the things that we do is we stress first and foremost, what is that key standard, that quantitative thing that's expected of the employee? Meaning if they did nothing else during the day or during the week, if they achieved this one key metric, would we consider that a success? And one of the things that we've done is identified a key metric with 3 supporting metrics for every employee in every office or department. And when you do that at a departmental level and at an individual level, everybody starts to then feel like they have a task, something that they're responsible for, that they're accountable for, and they're more likely to achieve it because they know at the end of the day what's the underlying thing that defines their success. And as you were mentioning, when you can identify the key metric that establishes their standard and whether or not they're being successful and associate it with a because clause. You're doing this because it helps us this way. This is how you're integral to the success of the company, the department, and so forth. Then they have purpose. They understand why they're doing what they're needing to do. But the last part of this, and maybe we're oversimplifying it, but I think it's a very key element, is we always go through an exercise of identifying whether or not the individual is a front office or back office employee, which is to say a front office person is someone that interacts with the customer. The customer may experience conversation with them, email interactions with them, maybe a face-to-face interaction. The back office, they're the behind the scenes team. They may not be interacting with the customers. The customers may not even know they exist. And what we do is we try and help the person realize where are they, and when they're forward facing, we want them to understand that they've got to always be on their best behavior, because they're kind of like ambassadors to the company, and we value that. But then the people that are behind the scenes, we don't want them to feel neglected or not appreciated. So we want them to clearly realize that the success of the company is based upon their engagement, their involvement. And as everybody starts to see their role, they're more able to see why they're important and what they're needing to do to be a success. And that plays into, I think, this analysis, this assessment of each person, because if they're able to meet that standard and do it in a way that's pleasing to the company, they can start feeling more comfortable or confident in the role they're performing because they're successful.
Absolutely. Yeah, actually, Ron Zaharian, the co-founder of Profit First Professionals, one of the things that he says on a regular basis is that you are responsible for the energy you bring into a room. And the more we understand about what the expectation is, the more comfortable we are, but often that's empowering. It's really a healthy thing for us to see what we're doing. And I do want to encourage you too. A lot of times when we're looking at this, we're like, okay, we'll define success. Well, they don't produce money, so how am I supposed to tell if I'm actually making money off of them, right? Success doesn't have to necessarily be a dollar value now. It can absolutely be an experience. It can be retention. You can spend time and energy even speaking with your employee. Let them help you with that. You might not know all the ins and outs of their role. Maybe even sitting down, spending the time, learning a little bit from your employees will help you identify these things. And that's really where I want to go next. A lot of times we sit here and we spend all this time, even on this kind of analysis, or we're constantly looking on how we can make our business better and stronger. But guess what? Your team really truly is your biggest asset. And your team really does know the worst use of the team. Right? So coming into this, profitability isn't just, oh, everybody's doing their role. Really, profitability is utilizing their perspective. They have a very different experience as a team player versus a business owner. They have a very different experience as a facilitator, as the business owner. They can tell you where waste is like nobody else, right? So leverage that. Putting parameters and experiences in place to be able to understand exactly what that might look like. Opening the doors to communication really is a great way for you to increase the profitability of your business. And I'm not joking, right? This is a huge opportunity for margins. So one of the things that we do at Profit First Professional, a couple cultural perspectives, we actually have a morning meeting. Every single morning at 8:34, actually it just changed to 9:01. Every single morning at 8:34 and 9:01, we come in and we have an agenda, a morning meeting where we talk about things that are impactful that we're going to do in the day for accountability. We talk about things to be mindful of, and we create a team culture. But what this allows is it allows us to focus on some key metrics in our business that really position us to have more insight into what's working, what's not. And it empowers communication. So if there's something where we're like, this feels so funny, we use the term, all right, well, we'll offline it, right? That opens the door for us to address little issues that could potentially become big pain points. And that's a great way, again, for you to leverage the perspective of your team. We also have quarterly team building, where we go out and we do an activity, and it doesn't have to be anything crazy, but we sit down together and we talk about the vision of the business. We talk about the financials of the business and the expectation of the business. We actually even did an exercise a couple years ago that was pretty cool, where Mike and Ron, they sat us in the conference room and they said, okay, I'm going to turn around. The bosses turned around and they said, okay, what I'd love for you guys to do is just sit down and I want you to talk about all the things that you've experienced over this quarter, pain points, ideas, suggestions. We're not going to talk. We're not going to look at you. We're just going to write things down. And at the end of that meeting, we actually ended up implementing at least 6 things that would impact one of our biggest pain points, right? And they were simple fixes just from us having the opportunity to share and discuss things. And they were all really, I mean, one of them was, okay, I speak to Profit First professionals all day long. I spoke to Profit First professionals all day long on a phone. How do you amp the relationship and create a deeper sense of community or relationship? FaceTime. We started using Zoom for every call, right? The little things, they didn't impact our cost, but they impacted our experience, which impact our retention, which impact our profitability and our position and our ability to serve. So little things like these are really impactful. The other thing that sometimes we neglect to do is capture what we do. Again, your team is one of the strongest investments you'll ever make. You know, they allow you to focus on your business and not work in your business. You know, what are ways that you can capitalize on them and their perspectives? You know, one of those things is documentation, creating efficiencies. You know, do you know what is the most impactful way to do billing in your company, right? Have you ever documented that system to be able to test that system, right? Our team put in place an opportunity to start to understand our systems, and with our systems, address waste of time, of resources, right? This is a great way for you to just start that off. Start that documentation, start those systems and processes. If you can't do anything else with your team or even with yourself as the business owner, start just documenting what you do. Start capturing systems so that you can have time show you whether or not they're impactful or not, or you can make little tweaks that impact your billable hours, your billable time. Start by just recording your screen so that next hire comes in. Now you have a video library to be able to share with them the tools and resources, but it's something that you can constantly grow and evolve to impact your efficiencies. And your team, again, will know all these things and be able to see all these things, especially if you're empowering them to do so. I think it was last webinar we discussed in depth, you know, energy always follows focus, right? Giving your team the ability to help you identify where there is waste is a really, really impactful thing for your business. But that empowerment is not to be taken lightly. They need to know that you want their help, that you want their perspective, and that you're going to be all ears. You might not implement everything, but you will consider everything. This is a great first step to do it.
So on your previous slide, you were showing how the team actually has a lot of the solutions that if you ask them, they actually will have ideas and suggestions that you may not have considered. And so as it leads to this conversation, one of the things that I think is important is if you asked your team, where is the weakest link in what's going on, you'll be amazed. There's probably a consistency, a collaboration where everyone would, as a consensus, agree this is the weakest link. So it'll be, I think, intriguing to ask that question of your teams because you may find that they are very mindful or insightful to what it is that's holding the company back or the customer's experience. But then when it comes to completing or communicating with employees, I like that quarterly team building because team is truly a cultural experience. Do the people in your organization feel like they're integral to the part of the success of the company, the customer? Do they feel like they belong? And then the video recording, one of the common things that I have as a concern, and it even was discussed today with a client of ours, we were talking about training and delegation. And oftentimes it's because they're reluctant to delegate because the person would not do the position or the task as well as they would. Well, video recording or having them shadow or watch what you're doing gives you the ability to ensure that they're taught correctly or can see the work done so that they can do it similarly. That's huge. So I like that suggestion of video recording. It's an inexpensive but useful tool to document all the processes. So it's very well said. I like that.
Good. Yeah, one of the things to keep in mind, the best time to record a system is before you need the system. And You don't know what you're going to need next. So just keeping a working library, even if it's you give yourself a target or a challenge of, I'm going to record 2 things this week. Start small, start simply. But going back to the concept of waste, it doesn't always have to even be just that you're not spending the time and attention on your employees or opening the gates to communication. Sometimes it's you have your senior employees doing junior work. Right? What I mean by that is you have somebody who's making $100,000 a year doing the work of somebody that could be paid $10 an hour. Are you mindful of what those tasks look like? Mm-hmm. What would that do to your margins if you brought on even somebody that was an intern that could do those junior tasks and free up the seniors' tasks to facilitate a greater billable task? Right?
Exactly.
There's hidden profit potential in our people. And a great way to understand what that is to ask the right questions, whether it's your people, whether it's you spending time identifying what your expectations are. But the other piece of it is sometimes we just cannot do everything ourselves. We're at that point where I'm in this awkward middle ground where I'm not a small business, but I'm not a big business, but I need to take the next step. And the only way I feel like I can do that is to hire. So when do I know when it's an appropriate time to hire? Growing your team is not a small to do. It's borderline terrifying, if you're not 100% comfortable with it, because it is an investment. So just to share with you something that we have utilized at Profit First Professionals that we share, this is a quick tip, not a hard rule. Okay. We utilize the $150,000 rule. Okay. That's what we call it anyway. I don't know what the professional or, the actual name of it is, but basically we utilize that line of $150,000. So as a business, if you generate $150,000 of income, you have the financial means to hire 1 full-time employee. Okay, here is the kicker. That full-time employee includes the business owner, right? Having an understanding of what that looks like. I need to make $150,000 in revenue before I can afford a full-time employee. You might get to the point where you're at $225,000. You have wiggle room to maintain your salary as the business owner as well as a part-time position as the business owner. Thinking about it from that perspective and then waiting for the generation of revenue to come in before you bring on a full-time employee can be the difference between you floundering with your payroll and meeting it on time. And that's the other piece too. A lot of times when we come into a hiring situation, if it's not full-time, we don't want it. There are some really impactful part-timers out there. What would it do for your business if you had a really efficient, effective part-timer that was there on time, did their job, and you didn't have to pay for all the benefits and everything, but there was still room as you grow to bring on another one. Actually, we had a Profit First podcast. Actually, if you don't have anything to do today, episode 158 on the Profit First Professional podcast, there's a really cool perspective that a business owner shared as to how he handled the hiring process for himself. He actually needed a couple of quality traits or expertise, right, for his business owner or for his business in this hiring position. And he was like, well, where am I going to find somebody who is really, really good at, this wasn't it, but bookkeeping and marketing and also customer experience and systemization. I need all of those people in a full-time position that only wants to make X. Well, what are the chances you're going to find somebody who's good at all of those things? And when I say good, I mean moderately okay at all of those things. The likelihood is really low. What would happen if you hired somebody as a virtual assistant or outsourced to somebody for marketing for 3 hours a week? And you brought on a part-time bookkeeper, and then you got a virtual assistant to manage your calendar. You know what I mean? Thinking about it from a different perspective can also impact your profitability and your financial comfort. We don't want people to ever become the pain in your profit first experience. And asking the questions and being proactive, even in the hiring process, can be a great way to avoid that.
Very good. So one of the things that I think is always on someone's mind is, when do I take that next step? And I love how you've addressed that. That threshold is one way to determine whether or not they can justifiably bring on someone to the payroll, because everybody's trying to grow, but they just don't know when. And especially when you're that solo entrepreneur, when you hire someone, in essence, it's very much you're giving up your take home to give to someone else to do a job you were once doing. And so it's a sacrifice to initially begin, as you grow your business, to be now a company as opposed to you and them helping you. It's them being part of a company, and it's easier to hire the 11th employee than it was the first employee.
Every time. Yeah.
So,
and that exercise that we showed before, do that before you hire. Think about it from that perspective. And the other thing to do too, it changes how you think about the person. Spending a couple minutes and defining your immutable laws. What do you expect an employee? What is absolutely imperative to the hiring process? Is it their education? Is it their listening? Is it their ability to learn? Is it their communication? If education might be the most important piece to you, have those immutable laws in place, and then define outside of those immutable laws what you feel is teachable, because that'll really help you as you're evaluating the people that you're likely going to be working with. And also give yourself a grace period of 3 months. Let them know that, we will start the hiring process, but we're going to give each other some time to get to know each other. We want an out. I might need to change course. You might not like working with me. So in 3 months, let's reconvene and see how we're doing, right? Opening the door to communication and expectation from the get-go is really powerful for both sides. But that extra time, just identifying exactly what you're looking for, but also what you're willing to work around. Because let's be real, nobody's perfect. Nobody's going to come in the golden horse and have everything you've ever wanted. They might have bad habits from a previous employer that you just don't like. What is teachable to you? What is not? Identifying those and focusing on those in the conversation can absolutely be the difference between profitability and frustration.
yeah. One of the things that I would add to your 90-day evaluation, which is very, very common, by the way, is that 90-day period, is two things. The first thing that I always do with our clients is first suggest that they always have a specific standard that they can communicate to the client or to the new employee, that simply says that above all the tasks that I'm hiring you to do, above all these responsibilities you have, this is the metric that determines whether or not you're successful. So this be all end all of what I'm hoping for. So at the end of the day, end of the week, end of the month, of all the things I'm asking you to do, this is one of the things that, come heck or high water, this has to be done. So it helps clarify of all the things that they need to be doing, what's the priority. The second thing is, with regards to payroll, I always counsel a client that if they're going to hire someone, they need to at least have 3 months of that person's W-2 payroll in the bank, so as to give a grace period of them learning the position and growing into the position before the position is self-paying, before it's self-producing. And so even if a person's in a sales capacity, I want to, even if I anticipate in month 1 they're going to break even or be profitable, I want to know that I'm not going to burden the company or myself with a stress that's unnecessary. So I have basically 3 months worth of revenue set aside that I can actually see this person evolve into the position without an unnecessary stress on the company. And so if you can't afford to pay that person's payroll the first month, and you're just crossing your fingers saying, I hope hiring them, they're going to be productive enough to generate the revenues needed to make the second or third payroll, you're really putting a lot to chance here. I want to know I have a system in place that they can implement comfortably and learn and be trained in. I want to be clear what's expected of them so that I know whether or not they're achieving what's expected, and they do as well. And then lastly, I want to know I can afford them. And that's part of this profitable philosophy is I want to know I have the cash there that I can gradually move them up. And hopefully month one, they're exceeding the expectations, but at least I've got that 90-day period that you were describing as kind of that buffer to get everything up to speed where I'm not stressed, they're not stressed, we're just doing what we need to get this done. So there you go. Great insights. Thank you.
Roger, am I grinning like a dork because you're speaking my language? But actually, you beat me to the chase because that's exactly where we're going.
Hey.
Open the payroll account. It sounds so simple, but it's a serious game changer. Yeah, open the account. Start testing your business's elasticity to afford this. Forget about $150,000. You might be at $100,000. Maybe if you're lean and green, you can do it. Think about it. Try it. You might be $200,000 and it's still, you've opened that payroll account. You've identified what the wage looks like for them in a given month and you start allocating it into that payroll account and you're crying a little bit. Maybe you should wait till 220, or maybe it means you have to eliminate a little bit more waste or cut a little bit more so that your business can afford it. Test your business. And a great way to do that is to open a payroll account. That's one benefit. And you already spoke about the other benefit. It's having that war chest. You know, actually, we had a Profit First professional that was in the position of hiring. She had a smaller firm. And, you know, when you're working in as a smaller firm, bringing in good quality hires can be challenging because there's a little bit of risk for those employees, right? And you know, they were in a circumstance where they found really great quality work, really great quality hire, and they were in the process of interviewing, and they really wanted to make the commitment, come on, work with me, right? And that hire was super hesitant. They were like, I'm coming from really good benefits. I'm coming from really secure income. I'm coming from a big company that has proven to me that I can be secure. And one of the things that are truly of value for me as a hire is that security. Mm-hmm. I don't want to work somewhere where I have to question whether or not I'm getting my paycheck, because the reality is in some of these small businesses, if you've ever watched The Profit, the reality is some of these employees that you see out there, they don't take paychecks or they wait 3 weeks, you know, for the employer. So some people have a real serious fear around that. What she did was she came and she said, okay, listen, I'm going to tell you, I implement Profit First. Here is my new hire account. Not only do I have profit in my account where I have my expenses for 3 months, God forbid anything happens, but I already have your paycheck for 3 months. So if we do have an unforeseen, devastating event take place in this firm, you'll be paid for 3 months, and that should be enough time for you to be able to find a new job and that security that you need. And she signed right there. She signed the commitment letter. So she brought in this really big position, this great experience, because she had some of these parameters in place. So it was security. It was security for her as the business owner, for the financials of the business, but it was also a great tactic for that hire. So a payroll account is a really great way. So you can use this for hiring. You can also use this in your implementation. You know, one of the advanced Profit First strategies, if you'll see in the book, oh darn it, I remember what page. I think it's like 158, if I remember correctly. It talks about the advanced accounts and things like that. Payroll is one of those. So when we're opening the accounts in our business, you can use a payroll or a hiring account to test your business's ability to afford a new hire. But if you have current employees and that's a big chunk of your expenses, open a payroll account, separate them out from your day-to-day operations. You know, you want your people to be on a different playing field than your paper towels, right? So thinking about it and allocating to your employees and your payroll first, and then having the wiggle room be in the more fluctuating expenses allows you to have that aspect of security when it comes to paying your team as well. Just one thing to be extremely mindful of in this. If you are opening accounts for the sake of expenses like payroll, like a new hire, and it has to do with things that are in your operating expense account, we still want the sum of all of those accounts to equal our target percentage. Okay, so if you are in that first bracket of our target allocated percentages that you determine from running your assessment that you'll see in the book, you want to make sure that your payroll is at 25 and your other operating expenses are at 5, if that happens to be the case. But just make sure that there is a set parameter around those and that you are still functioning in conjunction with your targets. So just a couple things to be mindful of as you're going through, as you're working with your employees, some things to keep in mind and ways to untap or tap that profit potential that may have been untapped otherwise.
So I'm going to add 2 things to what you just shared. One of them is regarding that account and getting to the position where you can comfortably hire someone. I think that's a great motivation for someone that's considering hiring an individual to say, well, I need this in place first. And so it gives you a purpose in getting that established so that you can comfortably hire that next position. But at the same time, I think it also gives you the time to come up with a more refined job description, what expectations you have of the role. You also are able to determine who is the ideal candidate that I want to fill this position. Is it someone that I want that's an introvert, somebody that's active, somebody that's passionate, somebody that's got this experience? So basically it's saying, rather than taking and having a knee-jerk reaction to, I need this week to hire somebody, and you start talking, it's in the coming 3 months, this is what I'm going to do, or in the next 2 months, this is what I'm going to do. Job description, key metric as to what's expected from the position, compensation, job credentials, what I'm looking for in the individual. It helps you be more deliberate in filling the position. And ultimately, in the end, I think it's less stressful. So it's that hire slow, fire fast philosophy that you sometimes hear about. So excellent advice. I mean, all of this is built around the idea of people, payroll, and profit. And so that's what we're trying to do. So Erin, are there any final thoughts that you'd like to share?
No, just don't be afraid to ask the hard questions. Don't be afraid to document. Don't be afraid to start systematizing different things. Little steps in the right direction count for big change and big impact. Just take a stab at it. Do even the evaluation, if nothing else. If you have a team, start small. Bring clarity to some of the things that are going on in your firm now, and you'll be surprised at the impact that it has just by asking the questions.
Very well said. Yeah, I think when hiring people, what we need to do, especially as profit first professionals helping clients, business owners, is helping them realize that just disliking a task or a function in business isn't enough of a reason to hire someone to do it, and recognizing you're not the best or the expert at a particular task, that you can hire somebody better than you to do it isn't always necessarily the right reason to act. When it's the right reason to act is when it's financially prudent for the business, when you're very clear and deliberate as to who you're hiring. It's when you're having expectations that are defined that you can communicate to the new employee. These things all play very comfortably into deliberately hiring someone that can become a key team member that can profitably deliver to the business. So excellent, well said. Thank you for contributing this. Obviously, everyone, this is one in a series of things that Erin and I have been doing to help Profit First professionals apply these principles with clients and help you understand that you can, in fact, offer these consultative services to your clients that are beyond just the producing of financial reports for business owners. This allows you to be a little bit more strategic in your engagement with your clients and really become for them that trusted strategic advisor that they need. So thank you, everyone, for this. In the description below, I'm going to provide some additional resources so that you can obviously find out more about how you can become a Profit First professional or apply these principles with your business as well as your clients. So, Erin, thank you for this opportunity. And if anything else, just remember this. The purpose of Profit First is to eradicate entrepreneurial poverty. And let's make the difference out there. And always remember this about Universal. If it's accounting, it is universal because accounting success is universal. Take care, everyone.
Thanks, Roger.